We're back in business with Bob Olstein, Chairman and CIO of Olstein Capital Management. He's with me here on set. Before the break, we were talking about the mega caps out there. You were saying you're still keeping money in the staples in this environment right now. But you're looking as well for an overall correction in the market for about 10%. What could be a trigger for that?
It's already happening.
Today's market sell-off you're seeing is...
I think the top was about 11,000, and you're almost down to 10,000 right here. Why wouldn't you get a correction when you had a 70 and 80% run-up? They've been, throughout my career, regular fare, and this does not concern us because we care about... There's a great editorial in the Wall Street Journal the other day by John Bogle who said people are into rent-a-stock, short-term movements, momentary illusions. We're into valuation, and we're still finding valuation. And even below the main atmosphere, the mega caps, there's a lot of valuation underneath there, but you're going to have to value companies on free cash flow. And now it's basically stock picking. You're not going to make sector bets and run the oils and run the commodities and do things that worked 3 and 4 years ago. It's not happening anymore.
When you look at the financial sector and the question of leverage, I mean, what makes you comfortable or willing to consider putting money to work in financials right now, given that you're also looking for possibly a move in interest rates in the second half of this year?
We're not in the big leverage financials. We're not in the major banks. We have one minor position in there. Our financials are the insurance companies, the casualty companies, and the asset managers. We're not ready to go in there. We think there's still more deleveraging, and we think regulation is going to happen, and if it doesn't, it should happen, and that would be the trigger to send the market rate down. If there's no regulation, the market's heading south.
So you like insurance companies, even though a number of insurance companies have their own sort of trading desk, iBanking businesses underneath their roof.
We like the fire and casualty companies, the companies that sit there with long-term bonds and basically have free cash flow.
So any names for us there?
Chubb is something we really like and have had in a portfolio for quite a while.
Now, you are saying that you're supporting the Volcker Rule in
Absolutely.
essence. But you're saying really it's regulation in any form is going to be a positive for the market.
Absolutely. People feel like they're not on the same footing with the big hedge funds and these big banks that took advantage of situations with CDOs and CMOs and derivatives and all of these crazy instruments which have entered the marketplace in the last 20 years. And if we don't regulate, Mr. Volcker did a great job during the inflationary period of the 80s. He's brilliant. He knows what he's talking about. Obama's starting to listen to him more and more. If you don't regulate, we're in trouble.
So where are you seeing still some gulfs between, capital spending and depreciation? And also give me your take on some of the earnings that we've seen so far and the profit forecasts.
Well, we're finding, for example, a small company like Teleflex, okay?
What do they do? Okay.
They're now a medical company, 75% of their business. They've switched from 25% of their business into medical supplies. And here's a company that's going to report $4 a share, okay, probably in 2010 or at the latest 2011. But there's $2 a share of excess depreciation over that $4. So their free cash flow is $6 a share, okay? And the stock's selling at 60, or in essence, you're getting a 10% after-tax yield. And there's many companies around like that today. But you're going to have to look at the quality of earnings, because if you don't look at the quality of earnings, as we go further and further into this market, you're going to see PE ratios of the ones that are taking advantage of the situation start to go down, and that's happened throughout my career. So that's what we're talking about, a company like a Teleflex or a Radio Shack, which is really generating $1.75 in free cash flow, and absolutely with their own free cash flow and their cash on the books, you could take this company private.
All right. Well, Teleflex is a company you're supporting, and you have a position in there.
Yes, we do, and Radio Shack we own too.
All right. Stay with us right here on In Business.